ऑल राइट, वेलकम एवरीवन। मार्केट रैप पंकज पांडे सर के साथ। सर, वंस अगेन एक और वीक जिसमें कि पहले 3 दिन हम लोगों ने आई थिंक देखा कि मार्केट ने थोड़ा ऊपर की चाल चली, एंड देन द रेस्ट ऑफ द 2 days वर समवॉट कोल्ड। क्या चल रहा है मार्केट में, क्या हो रहा है सर अभी?
So hi, good evening, Vishu. I think, see, overall action is happening in US. There's a lot of anticipation and hype in terms of what the US Fed will do. But in the meantime, at least for us, the good thing is that we have seen 1% gain in the Nifty, and like you pointed towards the later part of the week, I think markets have sort of turned lackluster. But small caps continue to sort of do very well with a gain of 3.5%. I think good part is that the overall market breadth has improved. So now you have about 60% of stock which are about 50-day exponential moving average. And I think one trend which I've been highlighting earlier also is that this year we have seen is that you get a correction of 5% in the market. This correction is there for 2 weeks, and the market sort of tends to head higher. So, which is why I feel that we have seen some recovery this week, but the range is shifted upwards to say somewhere about 24,400 to 25,200. So, like I had said sort of earlier, pretty much a new highs on the cards. But again, I think global cues will definitely have their impact on our market. So from that perspective, I think that is the only major element to be watched because earning season is behind us. So you really do not have much to sort of see in terms of domestic events.
Right, absolutely, sir. Sir, I think another thing on the cards is Nifty rebalancing is yet to be announced. What are our expectations there?
Largely, what happens in Nifty is that the performing stocks get included and the underperforming stocks get excluded. I think what has come or our sense is that there are two stocks, which is one of them is Trend. Trend is one of the best performing retail players which we have seen, and Bharat Electronics is another company which is expected to come into Nifty. And they'll be replacing two stocks. One of them is Divi's Laboratories, the other one is LTI Mindtree. I think one perspective is a typical shift which is happening from, say, two stocks going out and two stocks incoming. But one thing I would want to highlight is that people complain about markets being expensive. But when you look at trend, while the growth has been good, the stock is definitely expensive. So what it does is that if your more set of expensive stocks are going to come into the Nifty, the Nifty PE multiples are expected to go up, and which is why, if you sort of recall, we have increased our PE multiples to 22, and which is why the target for Nifty is 27,500. Now, again, coming back to the index rebalancing, what will happen is that these two stocks which are moving out, they'll get pushed to next Nifty Next 50, which is Divi's Labs and LTI Mindtree, and they are going to sort of replace stocks like SBI Cards and Berger Paints. So from that perspective, these stocks might see some impact. But one more important thing is that at the month end, we are going to see MSCI rebalancing, and I think HDFC Bank has to be there or has to see some action. Because if I recollect it right, the weightage of HDFC needs to be about 7.6, something of that sort. Whereas it's been the weightage given is zero point 0.5. So slowly that weightage is going to increase. So that should see a decent amount of inflows and some action. And at the same time, Bandhan Bank is going to see some exclusion, so it will see some impact because of that. But yes, Nifty rebalancing is largely trending towards companies which are slightly expensive. So which is why I think rich multiples are here to stay.
Right. And so monsoon has come and has spread its wings all across India now. So what is the update? How is it going on there, and how it will impact our market?
So up till now, no alarming situation, but the monsoon is definitely not up to the mark as anticipated earlier when the monsoon had sort of begun or the initial forecast had sort of come out. So at this point in time, the monsoon, we are seeing a 3% plus compared to the long-term averages, what we see. And there are some pockets like, say, south, where the monsoon has been good. So there, the surplus is 21%. You have surplus of 8% in central India, but east and northeast, you have a deficit of 12%. But generally, monsoon we see from the perspective of the kind of impact it will have on the inflation. But when you look at the sowing activities, especially for paddy and pulses, I think that those so it is up 2%. So that is not a really a challenge. I think the challenge could be only for cotton, where I think the sowing is 9% lower. So that is where there could be a potential impact. But again, I think our sense is that from September onwards, the monsoon spread is expected to become better. So we're keeping our fingers crossed.
Right. So my next question is around the metal sector. I think a lot has been going on recently in this sector with, some import restrictions have been increased in the steel sector. At the same time, I think non-ferrous metals, we had some news around recycled content has to increase. So what's going on in this sector overall, sir?
So in general, Vishu, if you look at this sector, has been facing a lot of challenges, and both ferrous and non-ferrous. Now, if you look at on the ferrous side, which is steel, so one big concern is that the China has been sort of slowing down, and any commodity, China is typically the 50% producer or the biggest producer. Now, what has happened is that while the domestic demand has been good at 7, 8 odd percent, you see a lot of imports coming from countries like Vietnam, which is eventually rooted from China. And that is sort of depressed the prices. So, which is why if you look at the steel prices are at 3 year lows at 50,000 rupees per ton. And last quarter was also not really great for most of the steel companies, and which is where the challenge lies. And on top of it, steel sector is doing a massive capex of nearly doubling their capacities. So the need of the hour was to protect the industry, and which is why the government has initiated anti-dumping investigations. And our sense is that it could be a matter of time where the government might sort of levy some duty to protect the industry. So I think till the time it does not come out, the muted performance of metal stocks is sort of expected to continue. But within that, we like JSW Steel. Now, coming to the non-ferrous side, like you said, the government is likely to push for more recycled content. One, because obviously it is economically better than a lot of energy or power is required to sort of produce. So what the government is mandating that for aluminium, you should have 10% recycled content, copper should have 20%, and zinc should have about 25%. And obviously, it does help the environment as well. So I think the only company which is going to benefit is expected to be Hindalco. So Hindalco is something which we have been preferring. I think Hindalco had another interesting development. So while the company was spending good amount of money on the US subsidiary, which is Novelis, but they have announced a further capex on the domestic side. So they have announced a capex of nearly $10 billion. So the domestic capex improves from $1.3 billion to about $5 billion over the next 2, 3 years. So basically, they are looking to put up a capacity of 8.5 lakh ton of alumina in Orissa. And then I think they are going to put up an aluminium smelter also. They are increasing their capacity by 2 lakh. And then there is a copper smelting which they are putting. So again, they are spending about 8,000 odd crores there. And then there is some downstream expansion what they are doing, which is going to cost them 2,400 crores. So a lot of details will sort of come out going forward, but I think they are spending significantly. And I think rightly so, because the demand of non-ferrous is expected to actually grow better than the ferrous. So by your aluminum and copper is expected to grow in low double-digit kind of a volume growth, and which is why this company is at the forefront of that expansion. And within non-ferrous, this is one company which we like with a target price of 825.
Right, sir. Sir, while we are on the topic, can we also talk about Hindalco? I think it has announced some big capex plans, and that's doing a lot of rounds around the market.
So I just mentioned the capex plan of $10 billion for Hindalco. So, which is where the domestic expansion or domestic capex is expected to be increased from $1.3 billion to $5 billion.
Right, right. Sir, next up, I want to ask about IREDA, which is planning to raise, I think, a lot of capital to become to plan for its own future. So, what's the update there, sir?
I think power is one theme which we feel like is going to sort of last for a good period of time, at least for the decade. And IREDA is at the forefront. So if you look at what the government is saying that, or what we are intending to do is that the renewable energy capacity is expected to be increased from say 180 gigawatt to nearly 500 gigawatt. That kind of a capacity expansion would require capital of 25 to 30 lakh crores, and somebody has to sort of fund it. So IREDA is one of the few companies which is going to be a participant in that overall lending process, and which is why the company has looking to raise 4,500 odd crores kind of a money. And that is not the only thing. In fact, they were also increasing the borrowing by 24,000 odd crores because they plan to disperse about 30,000 odd crores this year. And mind you, this is one company which is saying that they are going to take their AUM to 3.5 lakh crore by FY30 currently, which is about 60,000 odd. So they're looking at a CAGR of 25%. And that is the exact reason why we have this stock is in some of our portfolios, the stock which we've been recommending earlier with a target price of 330.
Right, sir. And I think PSU banks are also planning to raise some funds, sir.
Now, the issue, the challenge is that deposits are hard to come by. So bonds is something which the banks, especially the PSU banks, are resorting. So which is why you see that SBI is looking to raise 5 to 10,000 odd crores. Then you have Canara Bank looking to raise 4,000 odd crores, possibly more. Or then you have Bob also, which is looking to raise 5,000 odd crores. Largely, the challenge is that the deposit or the CASA is difficult to sort of come by, or deposit is coming at a higher rate, so which is why banks are looking at raising money through bonds. And it also helps them in terms of because they don't have to maintain SLR and CR around this. So from that perspective, it does help. And I think desperate time, desperate measures.
Right, sir. Sir, I think another key new buzzword that has come up around the markets is that of Biosecure Act in the US. So, what is it, and how is it likely to impact our markets?
I think one concern the West, or especially US, has that China does a good amount of copying of their technologies. So Biosecure Act has also been enacted with that intent because see, US biotech companies spend a lot of money on innovation, and you have Chinese CRAMS companies usually support them in this journey. But now the fear is that some of these CRAM companies might sort of pass on that IP to some of the local players, or they might sort of pass on the genetic information of US citizens. And which is why, keeping that in mind, the US has come up with this Biosecure Act. And what it clearly sort of tells them is that the Chinese CRAMS companies will not get access to the US funding, and also the US companies will not be allowed to undertake any new contracts with any Chinese players. And the existing contracts have to be sort of shifted because you have given a grandfathering clause of 6 years to move to a new vendor. So this kind of legislation is definitely positive for Indian companies because Indian companies do fit the bill in terms of offering a similar kind of services, and which is why I feel that see, the Indian CRAMS industry is $7 billion in size, and our sense is that it can easily keep on growing at 14% uh, over the next few years, and possibly more going forward after 2030. And now the names which come to my mind in terms of which are going to benefit is something like Divi's, Syngene, Hykel, Piramal Pharma, and if you sort of recall, we have buy on most of them, so we've been recommending. So we feel that China plus one is definitely sort of taking shape, especially in CRAMS.
Right. Right, sir. Sir, next up, I think a sector which we in the past few months we had talked a lot about consolidation is now, is it playing out in terms of price hikes? I think we have seen in the cement sector a few price hikes have been announced. So is it flowing from there, or what is happening here right now?
So cement as a sector has been announcing price hikes for a couple of months, but hasn't really sort of panned out. So usually it sort of fizzles out. I think the prices are at a 1 year low. So October, if a 50 kg bag was costing about closer to 400, now it's costing 350 rupees. So from that perspective, the prices have come down. Now, what companies have announced is 10 to 20 rupees kind of a bag per bag, kind of a price hike across regions. Now, whether that sustains or not remains to be seen, like we have seen historically. But overall sense is that there are two perspectives. One is the industry is consolidating for better. So top players will have 50, closer to 60% kind of a capacity. And the numbers of these cement companies have not really been good, especially on the margin side, because one, the Q1 got impacted because of the elections, and Q2 because of monsoons. But good part is that there is some softness in the raw material prices, so they'll expect some benefit of 100 to 100 rupees per ton. Otherwise, the price hike is quite important to restore the margins which were there earlier, and which is what the industry is attempting towards. Uh, I think while it has been announced, we need to see how it sort of pans out, whether it stays or not. And I think probably in few days to come, we'll know whether this is sustaining or this is another kind of a price hike like it happened in the past and eventually fizzled out.
Right, sir. And sir, of course, finally, the hidden gem of the week, what will it be?
So I think premium products are in good demand. In auto, if you look at, there are a lot of premium features people prefer. One obviously is the panoramic sunroof. The other is alloy wheels is becoming a standard feature. So what I'm recommending is steel strip wheels with a target price of 330. Now, this company manufactures both steel wheels plus alloy wheels. So they have a total capacity of 2.4 crore wheels. Of this, 0.36 crore is only for the alloy wheel. Now, but while it is lesser, but in terms of contribution to sales, it's about 28 odd percent. So obviously the alloy wheels are costlier, so which is where the revenue contribution and margin profile is definitely better. So company is expanding their capacity on the alloy wheel side from 0.36 to 0.48. And on top of it, they have acquired one more company through the NCLT route, and through which they have got an additional capacity of 70 lakh. So their capacity is literally sort of improving or increasing from 2.4 crore to 3.2 crore units. So it's a company which is a play on the overall premiumization. The alloy wheels don't get impacted by the trend what we are seeing in terms of a shift from IC engines to EV engines, and which is why I feel that this company does not contain that kind of a risk. Balance sheet is healthy, so our sense is that going forward, this company will deliver decent set of margins of 11%, good return ratios of 14 to 17 odd percent, and which is why I feel that this since it does not carry the risk, any company in the auto ancillary side which does not carry the risk of EV is a decent pick, and SSWR or steel strip wheels looks attractive to us with a target price of 330.
Right, absolutely, sir. Thank you so much for that, sir. This was a wrap of the stock market wrap of the week. We'll be back next week. If you have any questions for Pankaj, sir, please do put them down in the comments. Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.